Welcome to the business edition of PM Express. Today, we are not in the studio, but outside on the trading floor of the Ghana Stock Exchange as we throw the spotlight on activities on the Ghana Stock Exchange. In recent times, you've been watching the news and listening to us on radio. You heard about the market not doing well, billions of cedis lost and all those things. But with respect to all these problems, is it an internal challenge or an external issue? Development in the economy, recent reforms in the banking space that is hitting the market. Why is the market being described by some as a club of the rich? Is it too difficult to enter? Or rather, everyone can come and play on this market and raise money for a lot of activities. These are the issues that will be on the table on the business edition of PM Express as we engage the acting managing director of the Ghana Stock Exchange, Mr. Eko Afezi. I'm George Yafe, and that is what on the table for us to discuss. The Ghana Stock Exchange, external or internal issue. Back from the break, as we're talking about stock exchange and whether the challenges that they are facing has to do with more with externalities or maybe their own internal challenges. Well, as I told you earlier, I have the acting managing director of the Ghana Stock Exchange, Mr. Eko Afezi. Mr. Eko Afezi, thank you so much and welcome to the business edition of PM Express.
It's my pleasure.
We've heard a lot about the Ghana Stock Exchange and a lot of things happening here, but for the sake of my viewers, help me out when we talk about the stock exchange, the Ghana Stock Exchange. What happens here? We hear about trading and all the rest. We're on the trading floor of the Ghana Stock Exchange, and I'm not seeing anybody here trading anything. So help me out. What do we mean when we talk about stock exchange? The Ghana, what happens?
Generally speaking, stock markets are like any other market you find around. But what they trade is what we call the security or financial security. So normally you find what we call shares and bonds being traded on stock markets. When you talk about shares, you're actually talking about ownership position in a company. So a company flows shares and will ask people to buy the shares and become part owners. When you talk about bonds, what it means is that you're actually borrowing money from those who buy the bonds for a certain period of time. So what stock markets do all over the world is to provide two key things. They have normally two key objectives. One is to provide a platform where they can facilitate the raising of long-term capital by way of floating shares, also by way of floating bonds, so that companies can raise money by way of floating shares and get more or less permanent capital. Or you have governments also using the stock market to float bonds for infrastructure development, roads, etc. Governments will not float shares. They will normally float bonds where they can float a 20 years bond. So that is the first thing that stock markets promote. Then the second one, and that is what you see, and that is why we are here, is the trading of these instruments or shares and bonds that will be issued on the market. So what it means is that investors will be getting what we call liquidity. When you buy the shares and you want to sell, you go to a market through a stockbroker, and the stockbroker will go and offer your shares, and then that stockbroker or the same stockbroker will come and say, I want to buy. And that is what trading is all about, buying and selling of shares that have been issued already. They're not new shares. Same thing happens to bonds, or we can create bond markets. So stock markets all over the world provide these two objectives and create platform for trading. That is why we have a trading floor. But let me state this.
Right.
You're not seeing anybody on the floor here because technology has changed everything. So we don't even define stock markets as places anymore. They provide platforms.
Virtual.
Yes, for trading. So as we sit here, you look at the electronic screen behind us, they're trading from the offices, and we can see everything on those screens out there.
Help me out. I know there's something they call the IPOs and all the rest. And before even I come onto the market, so George Yafe and Co. company, I'll do a valuation of the company, and I'll say that it's worth about $100 million. Now I'm saying that I don't want to give everything out. I'm going to give about $50 million of the company to the public. And then I'll do the necessary pricing that the 50 million worth of that company is worth about 1 million shares. And now I have to price each share at a price that I'll make sure that it will be equal to that 50 million. I begin an exercise. I open it up to the public. They buy the shares and all the and then I come formally get your permission. Before that, I get the permission of the Securities and Exchange Commission. I get your permission, and I come onto the market and I start trading.
Exactly. And the trading is a trading in shares that have been issued to raise the money.
So it's not that the company is honest. You have access to all the shares. These
No.
are the issued shares.
Shares in the hands of shareholders.
One thing that you've tried to credit yourself with is raising of long-term capital.
Yes.
And that's one of the things that we're also discussing today about the fact that whether the market is still the preferred place for raising long-term capital. Walk me through and let me get that understanding. If a company also wants to raise money through the Ghana Stock Exchange, what is the procedure?
Okay, very simple. We actually set up in November 1990, so we are 28 years, we'll be 29 years as we speak. If you take the 28 or 29 years, companies have raised almost 4 billion cedis through this market.
Since this market started?
Exactly. 4 billion cedis by way of IPOs, or what we call the initial public offers, or by way of right issues, that is raising money after the initial offer. There are rules and requirements that companies need to follow in order to be able to raise such capital. One is the fact that you need to get advisors together. You need to get a broker, you need to get a financial advisor, you need to get a legal advisor, etc. Together, they'll produce a document called prospectus. That document is an offer document. It's a document that you use in selling the company and the company's shares. So that document will disclose every information about the company with regards to directors, past records in terms of financials, the risk associated with the business, how many shares you want to float, what you want to use the money you raise for, etc. That document must be approved by the Securities and Exchange Commission. So offers are approved by the Securities and Exchange Commission. So when you go to their regulations, they do have requirements and also disclosures that you must make in that offer document. So that is the first major step. Then the second one is the trading aspect, that is getting listed on the stock exchange. So in preparing that document, the offer document, you must also be thinking of the fact that you must meet certain requirements of the stock exchange in order to have those shares listed or traded on the exchange. So when it comes to the exchange, we have 3 main markets now. The first one is the main equity market. That is the main market that deals with shares. And they have requirements such as one, you must have 3 years audited accounts. You must raise a minimum of 1 million cedis. Then also you must float a minimum of 25% to the public. Most companies can meet these requirements. Then we have the Ghana alternative market, popularly known as the gas. For the gas, 1 year audited accounts, or you provide us with a business plan to show that you're viable, you're going to make profit, etc. Then also same 25% to the public. So there are lesser requirements there. So we've had companies going through these processes to raise capital. When you talk about the gas, we have just 5 companies that have done that. They've raised about 10 million cedis through that. When you talk about the main market, that's what I said, they've raised almost 4 billion cedis through that process. Then we set up another market for the bonds,
The bond market, yeah.
which is called the Ghana fixed income market. You also go through a process in raising capital, but that process is not as lengthy and as laborious as the equity side. Let me explain this. For equities or shares, you are listing the company and the shares. But when it comes to the bonds, you are listing just the bonds. You're not listing the company. So we ask you to disclose information about the company, the bonds you want to issue, the cash flows that will be coming in order to be able to pay the interest, etc. So you go through that process if you're a corporate body, and that's what we call the corporate bond. Then you float those bonds. Then you get them listed on the Ghana fixed income market for trading. For the trading of bonds, it's on what we call the Bloomberg platform.
Yeah.
There's a different trading platform for that. Then we also allow over-the-counter trading in bonds. But for the government bonds, they don't go through that process. Immediately they are issued, and their offer document is issued, and after the auction, etc., they're immediately listed or quoted or admitted on the Ghana fixed income market. In terms of numbers, when you talk about a corporate bond, about 7 billion, close to 8 billion cities have been raised on that market by 10 companies. So that is the one that's growing very, very fast within a very short space of just 3 years.
But nice ideas or nice programs, products, and then even service offering to the public when it comes to the stock exchange. But some are still raising concerns about the entry to this market. That you think a typical medium-sized business, yes, there's GACs, can make it onto the market. The requirements are so stringent that it is only the blue chip companies. This is a club of rich companies, multinationals.
I like the way you say club of rich companies. It's not a club of rich.
Can't make it onto the Ghana.
I just came from Clydestone AGM. Is Clydestone a very huge entity company? No.
That was when you started the market. It wasn't today. Can Clydestone still make it onto the market?
Sure.
They are struggling meeting even the market requirements.
They made profits this year. Their shareholders are happy. Companies will go up and down depending on what is happening to the products of the company and the economy generally. But generally speaking, the requirements are not that stringent. What happens most of the time is the fact that most entities in Ghana are afraid of transparency. They're afraid of accountability.
You think that is the problem?
It is a major problem.
The companies have told you that?
We've done a survey, our research, and that is why we set up the alternative market, to beat down the requirements and also to cut down the disclosures. When you take the alternative market, they disclose, the mandatory disclosures are just twice in a year, unlike the first one, which is straight quarterly. So you realize that accountability is an issue. Corporate governance is an issue. And all these things have come up in recent times. So you find a broker, goes to a company, starts preparing the company, and realizes that, look, it's going to take time. They have to put records together. They have to value the company. Then all the debates about the value now will start, because the original owner maybe has not put in a lot of capital. Now you want to raise capital, you might dilute it. It becomes very sensitive for them. It is not easy for an entrepreneur who sets up a company and grows it to say, I want to go out there. But that is where we made the mistake in Ghana. Because if you want to go beyond that small entity and become big and grow large and be able to employ people, you need long-term capital. And that is where we have problems with many companies using short-term bank loans for long-term projects. Then they will have to start paying these loans within a year or two. Then they start having problems with their financials. But you need long-term capital, either by floating shares or bonds. Watch the developed countries. That is the way most of them go. They'll start with private equity, get 1 or 2 shareholders in there. As they need more capital, they open up their company. By that time, they would have strengthened their corporate governance issues. They would have been very accountable and transparent. That is why, as an exchange, going forward, we want to create an incubation program where we'll take some selected Ghanaian companies through the process of keeping records and also maybe coming out proper governance structures.
I'll be getting more details on them, but I still want to come back to the entry requirement and whether we can localize that one. Can we have a localized Ghana Stock Exchange in terms of the rules and regulations? Because I will still mention or cite Comet Properties. And I don't remember the exact problem, but they also started a typical company. They struggled coming onto the market. The IPO was not successful. Even with UT Bank, there were problems initially that the IPO would have ended up not being successful. And I'm saying that you think that the time has come, as you look at the Ghana Stock Exchange itself and what they are doing and whether the problems that they are facing is an external issue or internal, maybe review these requirements and ensure that every company that matters in Ghana here should play in this space, just like what we have in the developed market?
There's certain principles or standards all over the world when it comes to raising capital and also doing an offer. Stock markets operate the same all over the world. The requirements might differ. The differences might come because of technology, or you might find the differences coming as a result of maybe some of them having a lot more companies. Maybe South Africa, maybe 1,000 companies or something, etc. But principles are the same. What are these principles? One, if you want to float shares, all that you're doing is that you're asking potential investors to give you money. And why would the investor put in money in your company? To make some returns. And the returns can come by the way of dividends, or when the shares are trading and prices go up, you can make capital gains. So the investor is investing for the future. In order to be able to determine, assess your company, what do? You need to provide that investor with information. And that's where the disclosure comes in. And that is where transparency comes in. The person needs to know who is the managing director, who are the key management personnel, who are the directors, what are the risks associated, what products are you dealing with, what do you want to raise the money for, etc. Then the potential investor will now take a decision. There's nothing localized about that. These are the normal things that any potential investor will look for. What we've done over the years is to reduce the requirements. That's why we set up.
And you have done that.
We have done that.
Then
let me give you you gave the example of comment. Yeah. That also taught us a lesson. The fact that they went to do an IPO and they couldn't meet the minimum offer. So when we introduced alternative market, what we said was that no company coming onto the alternative market should fail. So we introduced what we call mandatory underwriting by the company that is sponsoring. That is the broker or the investment advisor. And you must do the underwriting directly or indirectly. In other words, you use your own money, or you go and borrow or find a third party to give you the money, so that that company can meet its minimum capital that it wants to raise. So we learn lessons from what happens. So that is what we've done for the alternative market. The issue still comes back to either companies do not understand the benefits of raising capital, or they simply do not want to share with anybody. The concept of sharing, don't take it lightly. It's not easy. Let me crack a joke. Do you share everything with your wife? If you're not married,
no, not really.
You share everything with your partners.
No.
The concept of sharing is so tough for people. And so you can imagine, and I heard it even today, somebody saying that selling shares is very, very emotional for entrepreneurs. He set up his business, he reaches a point, and he said, give out a certain percentage to others. But then you must be able to convince the person that it is important to have value than just numbers. It's important to own 10% of a billion CD company than to own 100% of a 20 million CD company.
GAG, since it's set up, and just helping with a date, how many companies have you been able to bring on board?
We have 5 done.
When was it set up, sir?
We're not so worried about it. We set up 5 years ago. Because
so on average, are you doing one company every year, sir?
That is fine for GAGs, because you're using it to educate the Ghanaian entrepreneur that do think of raising long-term financing. That is why I said going forward, we're going to set up incubation programs. They've done that in other jurisdictions. Other places like London Stock Exchange, they have an elite program. Casablanca have just introduced that. Cote d'Ivoire is introducing that. We're going to introduce that next year, together with an international body. There'll be an announcement soon on that, where we'll select companies or companies that are interested and take them through the process of keeping records, making sure that your corporate governance structure is good, and build you up to the point where now you're convinced that I must go out to the public and raise long-term money. It is beneficial, no matter how you look.
So it's more of a preparatory ground to encourage these companies to come onto the market. Yeah. Again, we're looking at the discussion where we're looking at whether the problems that the stock exchange is facing is external or maybe your own thing. Let's still even concentrate on GAGs. 5 years, 5 companies. Don't you think that the Ghana Stock Exchange is too contempt? You know, let's sit down, let's cross our legs. Jojo Afe comes, hello, I
Do I
want to
talk
be
like
in.
that?
Not you, but I'm talking about the Ghana Stock Exchange. That, you know, so let's take our time. The companies themselves will
No,
come.
we've done a
Not
lot.
being that aggressive out there.
Tomorrow,
convincing the board,
Okay.
convincing the initial investors in these companies that this is the company that you need to put on the market to attract those long-term funds.
Okay, we've done a lot. Tomorrow, for instance, if you come up here, you're going to see a group of a number of people coming up here to listen to our team working on gas. Every fortnight, we have an open forum for interested companies. Some are targeted, etc. We target companies and go to them. To be able to convince entrepreneurs to come, you need to do the one-on-one talking. You need to meet the influencers, people who actually own these companies, and try to convince them. And that is the major strategy going to them. That is why maybe you're not seeing a lot. Once in a while, we do some electronic and print adverts. But we've been doing a lot. We've targeted companies. We've been speaking to them. As we speak, there are 4 or 5 companies in the pipeline for gas. They might come
this year?
They might come next year, for instance. But they go through a process. So we've been doing a lot in terms of going to the companies. We've been throughout the whole country. We teamed up with rural banks and went to some of their places. That is another area we're going to focus on going into the future.
As in they're bringing the rural banks on
Yeah,
board.
because they're already public companies and they have shareholders.
To GACS or the main market?
That's an interesting question. We want to create another market.
A third market.
We'll create another market called the over-the-counter market. A much simpler one. And what are we going to do? What we're going to do is that if you don't want or you cannot meet the requirements or get the list, then just become a public company, float shares, and be able to sell. Allow your shareholders to be able to sell their shares on that market. It's an OTC market which will be formalized so that there will be transparency and you will not need to meet all those requirements. So there are 2 ways that we can get some of these companies on board. And that also can be preparatory stage to move on to the bigger market. When you come initially, you're a public company. A public company is a company that is allowed to float shares according to the Companies Act to the investing public. So once you float shares, you don't want to list, you can still be on that market with just 5 shareholders or 10 shareholders. As you get in there and you get to learn about you get more visibility, and also you get used to some of the disclosure requirements. Then gradually, if you want to raise more capital, you can move up to the other markets. So coming back to the original question, we might look at it from the gas angle or look at it from the new market we'll create by the end of this year.
This is the business edition of PM Express, and today we are focusing our attention on the Ghana Stock Exchange. Recent times, you've been following the news, the business space. We heard a lot about the Ghana Stock Exchange. What are the problems? Is it an external issue? Is it the economy, the environment, or maybe it's self-inflicted? This is the business edition of PM Express. We'll be back after this break. Welcome back to the business edition of PM Express. Today, we throw in the spotlight on the Ghana Stock Exchange and what you've read recently about the market and whether it's an external issue as a player in this whole economy, or maybe it has to do with managers operating in a comfortable space. Well, I have with me here the acting managing director of the Ghana Stock Exchange, Mr. Eko Afezi. And before we took the break, you were talking about an over-the-counter platform as well. And my concern is that aren't we having too much product offering on the market that a market that is yet to pick up, you might end up even confusing the little interest that you have in the market?
I think it's always good to have different types of market offerings to suit different types of companies and also different objectives that people have. Most of these product offerings are not just done in a vacuum. Some research goes behind it. Why do we want to set up an OTC market? There are public companies in Ghana, but they don't want to list. They have their own reasons for not listing. So all that we are saying is that why don't we provide a platform for them to have their shareholders trade? has to focus a public company.
Yeah, there was a time where they were trying to come onto the market.
So what's
it
happening
never materialized.
So what's happening to the shareholders? They can trade over the counter, but it's not transparent. It's not centralized. So that's what we want to do, and gradually encourage more. It's all with the aim of building the culture of investing and the culture of also going out and raising capital. We are just 28 years. All the markets that you will be citing, which you like to cite, US, etc., they're all over 100 years.
Johannesburg Stock Exchange?
Yeah. The economies are bigger. The investment culture has developed over years. If I ask you a very interesting question now, you might not like to answer.
Nigerian Stock Exchange?
Nigerian Stock Exchange started in 1960. If you take Kenya, 1954. The recent ones are Ghana, Tanzania, Uganda, etc. And these are all in the same kind of bracket.
Couldn't you been the wonder kid on the block?
The wonder kid in the world is Shanghai, China. You know what's happening
Maybe
to
in
that
Africa.
economy. Wonder kid in Africa. We'll be there in a few years' time, very soon, with all the things that the government is trying to do in terms of the economic development, trying to make Ghana the financial hub, trying to attract foreign investors to Ghana, and we also trying to cope with that and saying, hey, we also will move in tandem with that. So we have a 3-year strategic plan that we're going to come out with, which will have the same aim of making sure we facilitate the financial hub, making sure that Ghana's market, that the stock exchange, becomes the preferred destination for financing and investing, and then also becoming a viable exchange that is demutualized. Those are the outcomes of what we want to do going forward.
Let's look at one very, very interesting subject here that year in terms of year-to-date return, some are saying it's not good. In terms of capitalization, seen some. That is where we had the story in the news about the Ghana Stock Exchange losing over billions of Ghana cedis. And all these critical indicators that you want to look in assessing the performance of a good market, they are all in the negatives. What is happening? Is it that the managers are comfortable, or listen, we operate in an environment and therefore those environment, any shift in those space impacts on the market?
Markets are influenced by so many factors. So many factors impact on markets, not necessarily the managers. What does the market do? That's why I like the way you started this conversation, by looking at what happens on the market. What happens on the market is buying and selling of shares, buying and selling of bonds, then also raising capital. Now let's look at the performance from the 3 angles of what we've done. Let's start with the very sweet news, the good one, the bond market. The bond market was just set up 2015. Ghanaians like fixed income instruments. The bond market in 2015 had only 5 billion cedis worth of bonds traded. As of last year, we had over 30 billion traded. As to speak, at the end of August, 37 billion cedis worth of bonds traded. It's going to cross the 40 billion mark. So you see how the bond market is developing.
Forward by government trading and not private companies.
There are 2 types of instruments there now. The government ones, which stretches all the way to the maturity of 20, then we have the corporate. If you review the development of bond markets, it normally starts with government bonds, because government bonds are the risk-free instrument. Then the corporate ones will now issue based on what is happening to the risk-free rate. That is why some of us are very excited about the fact that the government has been able to go all the way to 20. So now it allows a company to be able to do 15 years and do 20-year bond or 10-year bond and have the base as a government rate. So that is what is happening to the bond market. Very soon, before the end of the year, we introduce what we call repos, where they can lend out securities and it becomes yours and you can trade it, etc. That also shape up the interest in the market. We introduce what we call securities lending and borrowing also in that market. So there are a lot of things going to happen in that space. And that space, to us at this particular time, is the type of market that is growing. Why is it so? You did economics. The people who have done economics, they will tell you. They will tell you that when equities are not doing well, you find bond markets doing well. When share prices are down, you find bond markets doing well. And that is exactly what is happening. It is not that the market is not reacting. The market is reacting to so many factors.
So, what, I mean, I want to ask you, what are the main drivers
That is
of what is
coming.
causing this? I mean,
Markets are driven by 4 key factors. Foreigners will look at political situation. Other investors, plus foreigners, will look at what is happening to the economy as a whole, especially the macroeconomic level, what's happening to inflation, what's happening to interest rates. Those are key. Some will look at the company itself and the products they're dealing with. They're in oil business, they're in a product that is getting a lot of competition, they're in whatever business it is. They'll look at it. Then one thing most people forget to look at, apart from these major factors I'm mentioning, is the microstructure of the market we have. What do I mean by that? In a market where we have few investors, you can count less than 500,000 shareholders. When you go to the CSD, the accounts might be about 1 million, but more than half of that will be in treasuries and the bonds. You have only like 200, 300,000 having equity accounts, that is shares. So that is what we need to concentrate on. Develop that investment culture. But where you don't have many people buying and selling, markets will always remain illiquid. Very key. Because you're not getting anybody buying, you're not getting anybody selling. It's very important to have the two meet in the market. If you don't have the two parties meeting in the market, prices remain stagnant or prices will fall. Especially when you have nobody buying and people just selling. People are selling because maybe they need their money back for whatever reason. People are selling because maybe they want to go and buy a 15% treasury bill. Some will take the contrarian view. And there are so many investors who make a lot of money taking the contrarian view. What I mean by that is that when people are not buying, that is when they buy. And they sell when everybody is buying. This is the time to buy.
When the prices are low. Do I get from you that, okay, so the problem is more of an external issue. It's more of I mean, Unilever in a recent letter or notice to investors cited the current economic environment and also the aftershocks of the recent banking sector reforms.
Certainly.
Are these the main scenarios that are impacting the market negatively?
That's why I mentioned all the factors. We know if interest rates are coming down. We know back interest, that is inflation is coming down. But we know treasury bill rates are still 15, 16, bonds 17, 18, 19. So it becomes difficult for some equity people, investors to go in there. So there's so many factors adding up to it. That's why I gave you the theory and the scenario from the beginning. That in an environment where people don't like to take risk, it becomes difficult to sell equity. And let me quote one famous, remember Alan Greenspan of USA?
Yeah, I do.
He said, in any country where most people invest in risk-free assets, that country will never develop. Okay, we need to invest in risky assets. That is why there's a need to make sure companies can borrow, have long-term assets, have long-term funds to be able to expand, etc. The government keeps on hammering on that. But people are still just buying T-bills. T-bills will not grow the economy. Okay, so those are some of the factors. But let me just end on this note by saying that markets always go up and down. Markets do not go down forever. We've had situations where this market has gone over 100%. We became the best market in the world. The following year, same thing happened, 70%, 52%. Okay, now it's down. It will surely bounce back. Okay, when people realize that, hey, company A still has solid financials, solid fundamentals to provide me the return that I want to get into the future.
Do you also think that the banking sector reforms have had taken some shocks? The market has taken some shocks from that.
Certainly.
And that is why
certainly
we're seeing
is one factor. People suddenly realize that I need to be careful about the risk I take in investing my money. Some lost money. Some got their monies back. Okay, so people are very cautious about where they put their money. So that certainly impacted on the equity market. So you're not getting the appetite rising fast enough. With time, people are going to come back and realize that, it's better to invest in equities over the long period than short-term instruments.
Let's talk about, at a time when the market is going through some of these problems. I mean, this is the time that you expect to have some of these news on the market. Unilever recently, in a circular to their investors, said that, listen, we are warning you. We think that we are now taking the shocks of the recent banking sector cleanup and then the current economic environment. We also had car brokers announcing that they are not going to play in this space and all those things. First, let me ask you, what do you make of these two developments at this time when the market is going through some reformatory stage and trying to pick up from the shocks of these two other elements?
I'm not going to dwell much on the car brokers one because that's a business decision.
So it has nothing to do with the market?
No. A business decision.
It wasn't because of regulatory requirement they had to go?
No. It's a business decision the shareholder took whether to remain or not. When you talk about Unilever, that is a standard reporting or disclosure regime you find in the advanced markets where they give profit warnings. It's very important for investors to know what is happening to the company, in the company. That is why I talked earlier on about you are investing for the future. So it's good to know what is going to happen so that you can take your decisions. Whether to remain or you sell, you get to know it before you get the shock when the results are released. Watch the advanced markets. They always come out with profit warnings without maybe sometimes actual figures, just like they did. It's important. Research analysts in Ghana have been calling for that all the time. Why won't the company tell me about what's going to happen in the next 6 months, in a year? Okay, so that I get to know the direction to go. So I don't see anything wrong with it. It is good in terms of disclosure for investors to know this is what is happening to your company.
Sorry to take you back, but again, if the market was that attractive, I believe that every broker would want to be part of the space. You don't see that as a concern, in not going into the decision, but the fact that you've had one player saying that I don't want to be part of the space again.
Some people are even of the opinion that maybe we have too many brokers. That's what some believe. You have 22 brokers, small market, 57 billion capitalization, local domestic capitalization 22 billion, 35 companies on the main list, 33 companies on the main list, 5 companies on the gas. When you go to the bond space, it's quite different. There are about 38 dealers or more there because you have a lot more instruments there. So it depends on how people think about it. You need to look at your business and see whether going forward you can make profit or not. This market will certainly grow. It will certainly grow with time. Some of the initiatives that we are taking from now will certainly yield results where we'll get more companies coming to list and we'll get more investors looking at this market. We'll concentrate on education of investors. We'll make sure that we talk to entrepreneurs all the time. We'll make sure that we talk to the state's policymakers concerning government entities that can raise money through the market. We'll work harder to get the market growing.
What are some of the practical, including what you've outlined, some of the practical things that you are doing to help with the turnaround of the market and also whip up the retail investors? Because when I go to some of the annual general meetings, I'm then convinced that, after all, this market is not for the elite or the blue chip companies. So what are you doing going forward to ensure that we bring about that excitement we're all looking forward to in this market?
What we are doing today is one of them. We need to improve upon the visibility of the market. We need to do a lot more education. We need to let people know more about the market and the benefits of the market, both for the entrepreneur and also the potential investor, and what it can do for them. So it's very important that we concentrate on a lot of education going forward. We need to even start from the youth. Build that culture of investing in them. Build the culture where when you get money, you can save some and invest for your future than to do other things with the money. So we need to do that very seriously going forward. I earlier on mentioned we need to also tackle the issue of how do we get Ghanaian companies to go out there and raise money. That normally will take some time, but we will introduce incubation, like I said. We will visit as many companies as possible. My listing team have put together various groups of companies, done some research on them, and we'll surely be going to almost all of them, including multimedia. Okay, why would multimedia...
To come and list on the Ghana Stock Exchange.
Why would multimedia, as a growing entity, not flow shares and get longer-term capital and expand? You know, this is just by the side, but I'm just using that as an example.
Okay.
Okay. Why would the owners not do that? It's not an easy decision for them to take. That is why I believe we must build on it. Prove to them. Give them a value proposition that will make them think about the fact that, look, it's good to go there. And that's what we're going to do.
Quick one, what's the status of CPC and Aluex? I knew you gave them a time frame to correct some of their challenges and the other companies that were put on the waiting list in terms of those regulatory actions. Are they coming back, CPC, or they failed to meet those requirements and they are going to go off?
They're all coming back.
CPC?
CPC, PBC, they'll come back to the market.
That's PBC, sorry, yeah. I mean PBC.
They'll come back. They talked about restructuring and also submitting the accounts and all that. They'll come back.
I knew in the case of PBC, they have per your laws, they have a time frame to correct all those things. That was 3 months or so.
They've promised to correct them.
So have they done that?
The time period is not over.
3 months?
It's not over.
Okay, so they are going to come back.
They will surely. They've promised to restructure and submit all the accounts, etc. So they'll correct all the necessary the breaches and come back. The key thing is that enforcement is key for us going forward. That's what I told you about investors. Investors invest for returns. They must know what is happening in the company. That is what the universe signal out there is good for them. They know what is happening to the company so that they can take decisions going forward. So we'll enforce disclosures, the mandatory ones, then also educate them about material information that can affect the share price to also get it. Let me go back to the performance issues that you raised.
The market,
because I talked about the bond market, which is doing well. When you take the equity side, there are various ways that you can look at the market. Most people have not looked at it. In terms of values and volumes traded on this market this year, it's one of the highest we've had in our history. Okay, because we've had...
Why is that not reflecting on the market cap and the return? So where are these shares going?
Remember, we did well by trying to educate the audience about what happens on market. It's basically trading, buying and selling. And when you're buying and selling, you're exchanging shares. If prices go up, then the prices can affect the value of the company. You mentioned market capitalization. Market capitalization is simply the market value of the company. You multiply the issued shares by the price. So the market capitalization going up or down is influenced especially by the price. So once the prices go up, it will influence the market cap. When you take our market, the current market cap is about 57 billion cedis. 35 billion of that is coming from just about 5 external companies. Talo, ETI, etc. 22 just domestic. Okay, so when you hear stories like we've lost capital, we haven't lost capital. It's the market cap that has gone down, reflecting the changes in the share
The value
prices.
of those companies that are on, they've dropped.
Yes.
And that's impact on the market cap.
Exactly. That's what has happened. But so far as you hold on to your shares, if the prices go up again, you still have a lot of value for your shares. That is why they are long-term instruments. We don't take them normally at short unless you want to speculate. So that is one aspect. Index is used in measuring. The index is based on, our particular index is based on what happens to the market cap. So we have weights of different companies in that market cap. Fortunately, it excludes all the big ones that are not having those shares traded in Ghana, only the localized shares in there. So the up and downs can tell you what is happening to the market in terms of the index. We all agree to the fact that this year is negative. 2 years ago, it was 52, or 3 years ago, 52%. You didn't ask me that question that time. Okay, so markets will go up. In terms of values, we've traded about 540 million shares worth of shares, CDs, 540 million CDs worth of shares as at September. Compared to 580 last year. Last year, we had the highest value traded in our whole history. So it's almost at par. In terms of volumes, it's way higher because we had one of the biggest transactions ever in our history on this market. And that story is a story that must be told. Why did the group, that foreign investor, do the transaction in Ghana?
Is it the ETI?
Yeah, ETI. Why did they do it in Ghana instead of Nigeria or Abiy? They have confidence in Ghana. We should not doubt that. They believe in our systems. They believe in everything that we are doing. So they did the deal in Ghana. Okay, and that is what has propelled the volumes and values also going
Talking
up.
about all these transactions and activities on the market, in other developed markets that have grown over 20 years and over 30 years and 50 years, things happen in the economy and the market reacts. I stand to be educated. I was expecting even Lever shares to react post this announcement. And you don't see the market react when these external developments take place.
Okay.
Locked up in some institutional investors, they've taken a chunk of the money.
George, I like to go back to the initial discussion. I told you what the market entails, made up of buyers and sellers. When you don't have buyers and sellers, prices remain stagnant. When you don't have many buyers and sellers, reaction to announcements is lower. Liquidity, that's what they call it, liquidity. If you have high liquidity on the market, prices react faster. Market reacts faster to announcements. But don't forget, some people think our markets do not, our market would never.
But that's the perception out there.
That's the perception. But look at what is happening to the market. I tried to explain to you. Okay, people are looking at the bond market and interest bearing instruments versus equity. Why? Because that is the norm. What it happens. Okay, with time, it will shift when people realize that in the long term you're going to make that money. But generally speaking, when you have a market that does not have all the major sectors of the economy represented on the market, then you have the issue where it does not reflect generally what is happening to the economy. Okay. In other markets, you have all the major sectors reflected. So anything that happens to any of the sectors happens. The president comes and the market will change. Okay.
If you've just joined us in this discussion, it's business edition of PM Express as we focus on the Ghana Stock Exchange and the recent problems that has hit the market. Is it as a result of the external environment or maybe their own doing or something else? This is the business edition of PM Express. Be back after this break.